Hello. Good morning, everyone. I have the pleasure of having four of the finest fintech companies in India, and they're all in the business of money. Uh, and just last week in Mumbai, there was the Global Fintech Festival, and it was such a marquee event that some of my friends from the US called me and asked me, like, what's going on? Just to give you numbers, the fintech opportunity in India by 2030 is poised to be 2.1 trillion. And also, in terms of number of deals that are done in India, number of deals, number two market in the world is fintech and fintech related deals. We have also had our share of ups and downs when it comes to fintech. Obviously, Paytm was one IPO which went in the market with a lot of buzz, but then obviously there was some correction in the stock price, etc. But it remains favorite of investors. People say that you can't lend enough money in India. And I have the opportunity of having these great founders with me. So I will let them first just introduce themselves and talk a little bit about their company and what you are building, and then we'll take it from there.
Yes, thank you, Tej, and pleasure to be here. Hi, I am Pratyush Halen. I am founder at Fingpay. We are a fintech. We are enabling banking services and digital payments for the last mile customers. In terms of banking services, we are helping assisted banking. So we are present at more than 15 lakh outlets, which are small merchant stores and acting like an assisted banking points. And we have served more than 100 million unique customers and process a good volume of approximately $5.4 billion on an annual basis. We are also helping on the last mile, the microfinance companies and rural NBFCs in their digital journey for collections. So digital payments, which was primarily completely cash collections, how they have digitized their journey. And going forward, we are also helping them with the customer application, which not only help them in digital collections, but also help in other financial services on the same application. So in sum, we are present for banking and financial services in both the models, as an assisted model and an app-based model for the last mile customers.
Thank you, Pratyush. Thank you, Tej. It's nice to be here. So I am the co-founder of FTCash. We enable or we provide loans to small businesses, so MSMEs. So typically, anywhere between 2 lakh rupees to 15 lakh rupees for their working capital requirements. Fairly large business. I mean, as they said, right? I mean, the demand is enormous, more than $300 billion worth of appetite in this market. Our current AUM is more than 400 crores, and from a gross revenue, we do more than ARR of more than 125 crores. Still learning, I think. We have just taken some baby steps in the market, and I would say, crack the code from a credit underwriting and credit risk management perspective, and now looking to scale up.
Hi, good morning, everyone. My name is Bhuvan. I represent Per Annum and Lendbox, the P2P lending company. We are essentially a retail investment platform with obviously a business backed by a P2P lending model, where we focus on Indian retail investors. We have achieved profitability, like sustainable profitability since April this year. We manage a little over 2,000 crores worth of assets and a team of close to 100 people, and with a revenue of around annual revenue run rate of close to 100 crore now. We have close to 1 million retail investors registered on the platform, and with around 300,000 active at any given time. And our aim is to basically bring high quality fixed income and alternate investment products to the Indian retail investor, someone who lacks options beyond FDs and PPFs and other so-called such deposits. And it's projected to be close to a $4 trillion industry. So I think we just a drop in the ocean as of now. But the aim is to be one of the market leaders in the industry. And glad to be here. Thanks.
Thank you. Thank you, Tej. It's so wonderful to be here. I want to start by thanking Vikram, Tej, Ashish for really creating this opportunity for some of us. I am really taken aback by one very interesting event that is happening right now, which is Madhuri is the MC. I have only known her as a legal advisor who negotiates hard deals, but I could not believe that she has been the MC for the whole day. So I just wanted to acknowledge that. And I'm delighted to be here. And let me get to what my company GradRight does. Most of you are probably familiar with the challenges students and parents have in figuring out which college to go to and where to find the money for it. There's a lot of inefficiency, there's a lot of confusion, there's absence of transparency and accountability in this sector, which is essentially about the decision-making of which college you should go and what kind of money and at what cost should you finance that college education. So GradRight essentially is trying to automate that whole process of deciding for colleges, finding the money for your college in the most efficient, transparent, and accountable way. So we made a small start last, I would say 1.5 years ago in solving the financing side of the business. And as luck would have it, over the last 2 years, close to $2 billion of loan requests came to the platform. This is just students seeking higher education abroad. We were not prepared for that, but with whatever limited capabilities we have, we were able to help students get upwards of $150 million of loans in the last, I would say, 1.5 years. So that's one side of the business. The second is really helping universities market themselves better to the right students. And that's kind of taking off as we speak. Let me pause on that. My background, Tej, is really in the higher education space. I am not from the fin space or the tech space. I have been setting up universities in India, but the heart of the matter is really the problems students, universities have and the opportunities banks see, and we are solving it from that lens. So forgive me for my lack of understanding of finance and technology, but I hope my contributions still have some value in this panel. Thank you, Tej.
Thank you, Aman. No, it all goes hand in hand. So thanks a lot. And I promised you guys there's a lot of money at play, which clearly is. So Pratyush, I'll start with you. Data is the new oil, right? And you process a lot of data. Numbers are immense. So in decision making, as you are, kind of moving your payments to the next level, how do you use that data? And what are some of the new initiatives that you are launching in your company, if you can throw some light?
Sure, Tej. So in terms of data, a lot of payments data keeps coming on our platform. And initially, we started with using that data for, prevention of frauds, prevention of chargebacks, because that is the most important thing to develop a trust for any platform. And I think that is one of the very key differentiators from competitors, that if we can analyze that data and create checks and balances in the system, which may prevent further, misuse of the system and plus also generate that trust in the customer. So I think that helped us a lot. And in fact, the data which we have, so creating those checks with that data and running on that previous data helps us really analyze what percentage of frauds could have been prevented and what percentage of genuine transactions would have got affected if we put those checks and balances in place. So we started with those kinds of, usage of data. Then slowly we moved to how we can really get to know our consumers. So we started building consumer profile using that data. That, okay, this consumer is also making an repayment of an EMI. He is also withdrawing money. He's checking his bank statements on our platform, so we get an access to his bank statement, so we know, what kind of subsidies they are getting, etc. So how we can offer relevant products to that user. And we also have the locations of the user, so that also helps us, analyze what kind of location it is, what state, what tier of the town, etc. So basis that, now we are building on a lot of products which can be very helpful for that consumer in terms of financial services, which we could offer to that user. So like I was mentioning in the introduction, that we are building a kind of customer application with a lot of financial services. So it need not be very generic application, but how it can be really tailored and customized for that user. So showing only the relevant products to that user. So that's what we are using the data for to start with. Yeah.
Thank you. Sanjeev, you can add.
Yeah, so I think for us, data is at the heart of what we do, right? We typically lend to small businesses, which will not get a loan from a traditional bank or let's say a large NBFC, right? So I think it's imperative for us to manage data. So we use data for credit underwriting. So basically, before we give a loan, whether we should give a loan or not, right? And we use both point-in-time data, time series data, etc. Right? So just to give, and this is this is a ever-learning process, right? So for example, now we have started looking at data in some sense that, okay, so you've been living in Mumbai. What was your last location outside of Mumbai? Right, so it gives us a propensity that whether you will take the loan and run away, let's say, and we can't find you, right? So we use a lot of data to underwrite. Even post underwriting, I think once we have given a loan, risk management is very important for us. So we use data to give early warning signals. So if something is going off track, then we can actually go to the merchant, have a conversation and do that. So all in all, I think data is very important and it's a lifeline. What I have seen now is a lot of interesting new data is coming in this space, right? Which obviously adds a lot more value to our credit models and our collection models, etc.
Excellent, excellent. I think in your case, you have both sides, right? You have investors and your lenders.
Exactly. I mean, given that because of the P2P lending model, which we started with, we have we've been fortunate enough that we have two sides of large data sets, like I mentioned, close to 1 million registered investors on one side and close to 20 million odd registered borrowers on the other side. So we understand how data can be actually oil and better than gold because on the investor side we're able to understand trends, seasonality, if any, the kind of products investors like or they don't like, and able to tailor products according to whatever the retail investor might like and might sell better, and similarly design products with our partners accordingly. On the other side, we're able to give our partners insight when it comes to capital collection efficiency, EMI repayments, the kind of borrowers which are doing well, the regions, areas which are doing well, something similar to, I'm sure, what Sanjeev also, FTCash also experiences. So, I think data is something which is an ever-evolving process. I mean, I think you can never have enough, to be very honest, but also we are all limited by our capabilities to how much we can collect when it comes to data. But the more analysis you do, I think the better insights you can gather, and it helps in also creating a much leaner and better operation rather than throwing darts in the dark. And it's better if database decisions are always much more accurate and much better, and leaves much less room for mistakes.
Yeah, and Aman, I think you're now helping lenders make decisions, right? But you on the back end are using a lot of student data. So, if you can talk about maybe a little bit of your team, which is behind it, and how do you help lenders, that'd be very helpful.
Sure. So I think we are probably the first company in the world which believes that data, AI, machine learning can actually change the way college selection decisions happen, student admission decisions happen, and the way financing happens for education at large. If you look back, whether we applied for college or in fact, when some of our professors applied for colleges, they all had to go through the same process, writing those lengthy, complicated SOPs, filling out those forms, and hoping that somebody will look at all this and take a good decision. I think you can completely change that. College admission decisions are beginning to move towards entirely data-driven kind of frameworks. Similarly, students who went to counselors for decisions, or somebody, let's say, in Ghaziabad was going to tell you about all the great universities in, let's say, Canada, not having been to any one of them, sounded quite bizarre to me. But now, our platform, by using, I would say, at least a couple of million data points that we have collected from both student side and university admission side, we are able to be fairly accurate in suggesting the right recommendations for a particular student. Similarly, on the third side, we have banks who are making credit decisions. They have thousands of rule engines, which is mapped to certain student profiles, college profiles, and so on. So we are able to take all that data from all major partner lenders in India, and even foreign lenders, and then we've started making close to 90-95% accurate recommendations to each student on which is the right lender for you today, based on the profile that a student gives us. We believe that we can make our lenders super efficient, cut their costs by, I would say by a fair amount, and potentially start powering innovation for them. So there are market segments that our lenders have not been able to get into so far, but now we are able to make product recommendations to them, and they're able to expand their portfolios faster than ever. What used to take 40 to 50 days to process as a loan application now takes 5 to 10 days. Our goal in the next year is to make it almost instantaneous. So a 40 to 45 lakh rupees loan, instantaneous. That's power of data. We have university partners actually willing to fire out admission decisions from our platform. No need of SOPs anymore. That's where we are going with data and tech. While some of us say it is oil, for us it is oxygen. If there is no data, we don't exist. And I think that's where I think we believe that it can transform transparency and accountability in this sector. We are running out of time. I can't believe there's a counter there. Yeah. So I'll just shut up and back to you, Tej.
Thank you, Aman. And I think you started by saying you can't contribute. I think you're contributing a lot, so that's good. And 2 million data point, that's excellent, actually.
It's actually, right now, it's 7 million on the lender side. And on the student side, it's probably close to, I would say, 30 to 40 million data points that we're looking at.
That's brilliant. I just want to switch topic from data to capital efficiency. And Sanjeev, I'll start with you. For any fintech business, which I have seen in my career, it is extremely important to be capital efficient. So how do you work on it, and how are you improving it as you're building the business, right, for now, like 6-7 years now, right?
So I think, obviously in the lending business, from a regulatory perspective, right, we are all supposed to keep capital, right? So that makes it a little bit capital inefficient, if you can say that. But now there have been some new models that have come in. So for example, recently RBI released the new guidelines where FLDG you only need to keep is at 5%. So that suddenly makes it a lot more capital efficient. So you partner with a bank, partner with a lender, with a larger NBFC, right, where let's say they have a lot lower cost of capital, and you only keep 5%, they keep the remaining, let's say 15 to 20%, and then it makes it a win-win situation, right? So I think that has been one. The second way we have been working on making it more capital efficient is it also depends on how good your margins are. Right. I mean, if the loan is able to pay for itself, or let's say pay for the capital for the next loan that goes out, right, that makes it good. So I mean, we keep our net interest margins, which is basically what we charge to the customer versus, let's say, cost of funds, is north of 15%, right? So anywhere from 15 to 20%. So that's pretty high net interest margin. So I think that also helps us from a capital efficiency perspective. In the third piece is just being, I guess, I mean, depends on how you want to run the business. So there are two ways, right? Either you scale up and then do the monetization, or you first figure out the business model, make sure that your algorithms, your credit losses, origination costs are all making sense, and then you scale up. So I think depending on the business model you choose, you can also become more capital efficient.
Thank you. Bhuvan, other than data and AI, I just also want to focus a little bit on regulatory side because you're in P2P lending. How has that behaved for you, positively or negatively, or what trends are you seeing on that?
So the regulation has obviously structured the entire industry as opposed to being the wild, wild west. Everyone knows the parameters within which they can operate or they cannot operate, and the things we can do and cannot do. Obviously, there'll always be times where our interpretation of the regulation is different from what how the regulators sees it or the way they envision the business models to be evolving. For example, in our case, the regulation came out in October 2017, so 6 years ago, and there's a lot of evolution which has happened since then within the P2P business. And obviously, then the regulator still has a very different point of view as to how the business should have scaled or could have scaled as opposed to how the current players are operating. So, but I still won't say that, I still would say that regulation overall, especially when it comes to after looking at China, has an extremely positive impact because it tempers down aggressive or some bad apples, and you can all operate within a regulatory framework. There is someone looking over it, so it increases the trust level and the confidence of the user. We just, because being an investment platform, we also acquired a license from SEBI recently, so which again boosts investor confidence, because I think in India, or not just in India, anywhere in the world, the moment a customer sees that there is some level of government body overseeing the operation, then overall all stakeholders, the trust is much higher.
Yeah, makes sense. So Pratyush, you are expanding more into the tier 2 rural. Just how's the growth been, and where do you see next 2 to 3 years on the payment side? Because we all talk about like how well the Bharat story is building up, and you are right in that Bharat story. So where are you heading with that? If you can give us a picture of that.
So our thesis of starting Fingpay was this only, that in a urban segment of people like us, we are already spoiled with too many options in terms of financial services, access to best of the lowest interest rates on loans, or maybe other financial services at a much lower cost. But that is not being enjoyed by the people at the last mile, people in the tier 2+ towns, or people who are underbanked, or who doesn't have a good credit score, or maybe doesn't have a credit score at all. So the idea was how to reach those segments. That was one. Second was that segment is much bigger than the segment which is, everybody's targeting. So there are a large number of customers out there compared to customers in urban areas and people like us. So I think, so for them, it's not multiple choice, but we become only the choice for them. So that also gives us a, lot of confidence. Third is, I think it feels very happy and proud to, help them with getting them that access of the best of the financial. We are not the manufacturers. We are more of like a marketplace to them. So, getting them the best manufacturer options out there at the lowest rates possible. So that is something we have been doing, and that has helped us reach that scale. So like I talked about, 100 million customers we have been able to serve in just 6 years of our operations. So that thing helped because we were focusing on this segment. It, of course, takes some time to reach there, but then the fruits are there of reaching there.
Thank you. 100 million customers, that's a pretty big number. So Aman, coming to you, we have a lot of LPs who are lenders, and in your platform as well. What are the things you want from them to propel your business more as you are building it out?
That will take another half an hour to ask, but I think I really feel we can do so much more for our students and, of course, universities and our lender partners if we can focus hard on deploying the latest tech. I cannot emphasize enough on how, AI, and more than AI, I would say generative AI, is going to transform how we run our company. In terms of our staffing plans, we are revising all our staffing plans because half of the content team, brands team, so-called, we never imagined counselors, but I wonder all those competition kind of that we have in this space who have hired hundreds and thousands of counselors, I don't know what they're going to do with them. So there's a lot of change that we expect on our side by using tech. But I think if banks in India can just move faster on integrating with AI, machine learning, and so on, I think you're looking at going to 8 to 10x in terms of how many loans we can do from here to the next 3 years. So let's say this year, some of our partner lenders together have done around 40,000 crores in educational lending. I believe it can go to 200,000 crores in the next 4 to 5 years if they can just start playing tech. There is so much demand, and we don't understand demand because we don't have data that can help you understand demand. But with application of the right tech, we can change opportunities for students. And these are amazing students sitting in tier 3, tier 4 towns and villages of India. They have gone to tier 2 colleges. They have not all gone to IITs. But you would fund them if you knew them, Tej, with your own money. If I can show you 500 students to pick from today that you'd like to put your money on. I think that's the opportunity. Our partner lenders can see that, and we can make it available for them, provided we play the tech game. Let me pause on that.
Thank you, Aman. This is just a quick one. We've been hearing a lot about ChatGPT, AI. I just want to understand, and we can start with you, Vishen. What is happening? Are you using it? And if you are, like where?
If I tell you genuinely, so I use it almost daily. So a lot of my mails previously, if you're writing to an investor or you need to actually work a lot on the things apart from the data points. So I just give it data points and it makes so well mail. And then I even personalize it, that make it personalized. So then it doesn't seem like it's generated by ChatGPT, but it's actually generated by ChatGPT. So, it gives a personal touch. So it's been very, very helpful, actually. A lot of time we are saving. And I think that, in the future, lot of, like you were talking about capital efficiency, etc., lot of these tools will help us even further. Like, previously we were doing more of a project management kind of tools, which were saving us a lot of time. But now these tools will make a phenomenal difference in those things. I'm not sure how it will affect the economy because, a lot of jobs and a lot of other things. But from an efficiency point of view, it actually increases a lot of efficiency.
Yeah, so I think we've started using it, and I believe the first step will be, in terms of improving your efficiency in the team. So, for example, my tech team, right? I mean, they use it, and it's like a junior assistant, right? So it gives you a good starting point. So rather than starting from scratch, maybe 60-70% gets done, and then you add or build on top of it based on what you actually want, right, in terms of the nuances. So I think it will increase the efficiencies across the team. I think from a customer service perspective, we will start using it in terms of answering, customer queries, etc. We believe that you can, now there are interesting uses of AI in terms of voice tonality, etc. So the computer can mimic my voice, my tonality, etc. And you can even start using it from a collection calling perspective and all of that. So we see a lot of interesting use cases of this, but obviously, it's going to develop over a time. It's not a silver bullet to happen tomorrow.
Got it. Yeah. A quick.
Okay. Yeah, honestly, we don't use it in most of our core businesses. We definitely use it when it comes to solving first level of customer queries. I think then just like initial hand-holding AI and generative AI specifically definitely helps and to provide a more tailored response to anyone who's asking a question. We do use a bit of machine learning when it comes to recommending products to our retail investors and also allocating capital across different products which we have. But beyond that, I think when it comes to finance, other than assessing trends, actual customer-facing, there's still maybe some time to go. Except, yeah, when it comes to customer service, I think is one very big area where AI can definitely help and provide more tailored responses to each and every customer so that they feel valued.
Great. Aman, do you have anything to add otherwise?
Yes, just a point. Yesterday, I was speaking to two of our advisors. One works for Department of Defense in the US, and he predicts the real-time risk of all US assets in the world in real time. And the other is a very distinguished scholar a scientist at probably one of the biggest tech majors in the world. I cannot name him right now. And both of them, they made it very clear to me that this is going to change the world, generative AI. And I can go on and on about what they told me, but when they were talking, I got reminded of the first philosopher I read, which was Ayn Rand. I was very young. I was in first year of college, and I read Ayn Rand. And I remember her quote. I remembered her quote yesterday. She said, you can ignore reality, but you can't ignore the consequences of ignoring reality. And I feel that I'm looking at our own company and saying, why haven't I changed already? Because what these guys are telling me, I don't know if you followed the news. Verizon has laid off 6,000 people in one shot. You're looking at a wipeout of a lot of service sector, a lot of counseling as we imagine today, a lot of decision-making, data analysis, all that is going to change. I'm not a tech guy, but thankfully I have advisors who are helping me think through this. Let me pause on that, Tej. Thank you very much for the time.
Thank you so much. I think please watch out for these gentlemen. They're off to a great side. And we already know that fintech sector is poised to benefit. And thanks for all your time. All the very best and see you soon. Thanks.
Thank